Hello everyone, you are watching Sahab Academy. If you like our videos, then please subscribe to our channel and also hit the bell icon for the regular updates, and also follow us on Instagram, Sahab Academy. Now let's go to the video.
Hi everyone. Today we are starting a new chapter called joint venture. Now first let's understand the meaning of these two words, joint and venture. What is the meaning of these two words? See, joint means something that is done together. Yes, something that is done together, and venture means business. So basically joint venture means joint business. That was the meaning of joint venture. Now let's understand the concept of joint venture with the help of a small example. Let's say there's a person called A and a person called B, and both of these persons are builders by profession. They are builders by profession. So A is a builder and B is also a builder. And let's say A is working in Shantinagar. A is working in Shantinagar. He has his office in Shantinagar, and in Shantinagar he has undertaken a lots of projects. Currently he's doing lots of projects. He's building a house, an office, a showroom, etc, etc. All right. And B has his office in, let's say, Indiranagar. Okay, he has his office in Indiranagar, and in Indiranagar he has also undertaken lots of projects. He is building a house, a small clinic, a small hotel. Okay, so small projects they have undertaken, and they are working separately. All right, A is working in Shantinagar and B is working in Indiranagar, but they know each other because they are in same profession. So they know each other. Okay, they are in same field, right? He's also a builder, he's also a builder, so they know each other. Now let's say A has 20 crores and B also has 20 crores. And one day what happened? On one day, a tender came out in the newspaper. What came out? A tender came out in the newspaper. What is tender? Tender means an invitation by the government or any company to the builders or construction companies to undertake projects for them. Have you heard about road tender and all? Yeah, same. So here a tender came out in the newspaper that from a company that they want to build a building. Okay, and the minimum required capital they kept was 40 crores minimum. 40 crores minimum, only then they will consider for any company to give the tender. All right, and A saw that tender in the newspaper, and A became very much interested in this tender to undertake these projects and build the building and earn profit. But the only problem was the lack of finance, because he only had 20 crores. He doesn't have 40 crores, so he couldn't apply for the tender. But what he could do is he can go to this person B, and he can talk with B and come to an agreement, a temporary partnership. It is what is called temporary partnership. Okay, he can come to a temporary partnership with B that they can both contribute in this project and can do this project together. Okay, they can do this together. That is what is meant by joint venture. Two persons of same field, two or more, okay, come together for a specific task, for a specific project, and after the completion of this project, this temporary partnership which they created comes to an end. It would get terminated. This partnership would get terminated because in the beginning itself it is agreed that after the completion of this project you have to go your own way and I will go my own way, because they are builders in their own localities and they are micro builders. Yes, they are not big builders, they are small builders of 20 crores capital. They have 20 crores, so they are coming together for only specific purpose, and after the completion of this specific purpose, this temporary partnership would come to an end and this partnership will be terminated. Okay, so this is what is meant by joint venture. And in joint venture, the members are called co-venturers. Okay, in partnership, how we used to call partners the members? Yeah, here we call them co-venturer. Okay, co-venturer. See, in partnership what we used to call A is partner of B, B is partner of A, right? So here in joint venture, what we will call, in joint venture we will say A is the co-venturer of B and B is the co-venturer of A. So this is how you refer the members of joint venture, okay? And it can be more than 2 persons, okay? It can be any number of persons. So it is a temporary partnership where 2 persons come together for a specific task, and after the completion of that task they terminate the partnership and they go on their own way. So A spoke with B about this project and they came to an agreement and they agreed to contribute 20 crores and 20 crores. So it will become 40 crores and the tender will be given to them, and then they will make the building, and then at the end they will make the profit, and the profit will be shared among them. Profit will be shared among them. Okay. In what ratio? Whatever ratio that was agreed between them, on that ratio. Okay, if the ratio is not given in the question, then it is very simple. Like partnership, we will take 1:1. If the ratio is not given, okay, mostly they will mention the ratio 3:2, 2:3, like that they will mention. But if it is not mentioned, then you have to take 1:1. Okay, this is what is meant by joint venture, a temporary partnership. Joint venture is a temporary partnership which is created for specific purpose, and it comes to an end when that purpose is fulfilled or that purpose is completed. All right, now why the joint venture is done? Joint venture is done because of lack of finance or lack of technical know-how, etc. Okay, and after the completion of the project they will go their own way. A will go his own way and B will go his own way. They will not see each other again. Okay, this is what is meant by joint venture. So this was the complete concept of joint venture. Now let's see the differences between the joint venture and the partnership. Okay, easy, right? Okay, now let's see the differences between the joint venture and partnership. The first difference is of nature. See, the nature of joint venture is that it comes to an end after a particular venture. Yes, after the completion of a particular project, after a completion of the particular venture, the joint venture comes to an end. Whereas partnership is not like that. Partnership is continuous. It may go on forever. It may continue for 10 years, 20 years, 30 years or more. It depends upon the agreement. Yeah, here it is continuous. Here it is temporary. Here it is temporary. It gets terminated after a particular venture. Then the name of entity. See, in joint venture there is no specific name given. Okay, there is no specific name. But in partnership it has distinct firm's name. Always in partnership the firm will have a name. Okay, here there is no name. And then we have parties. See, the parties of joint venture are called co-venturers. Okay, the parties who come together for a particular venture, they are called co-venturers. And in case of partnership, the parties which come together for the business are called partners. Here co-venturers, here partners. And then the governing act. In joint venture there is no specific act. Okay, there is no specific act. But in partnership there is a specific act called Indian Partnership Act 1932. Yes, we know this, right, since 11th standard. Yes. Then the liability. See, the liability of joint venture is limited. Why? Because in joint venture what happens, 2 or more persons come together for specific task and they invest, let's say 2 lakh. They already have a big business, they already have separate businesses, right? But they are coming together for a particular venture, for a particular work, for a particular business. So they are coming together and they are investing some little amount, like 2 crore, 1 crore, like that. They are investing a small amount compared to their actual business. Yes, they are coming together and they are investing some amount of capital and they are doing business. If this business goes to loss, then they are going to lose only 1 crore, like that. But they will still have the whole business. But in the case of partnership, it's not like that. In the case of partnership, the entire firm is there. Entire firm is there. There's no other businesses and all. Entire firm is there and they have invested, let's say 20 crores in them, 2 partners. If it goes to loss, then entire amount is gone. So the liability in partnership is unlimited, whereas in joint venture is limited. Okay, because in partnership there is no other businesses and all. Only one firm is there, of which there are 2-3 owners. Okay, that is what happens in partnership. Then the duration. See, the duration of joint venture is maximum maybe 2 years. Okay, hardly it is 2 years. Mostly it is 6 months, 4 months, 5 months, maximum 1 year, or maximum it is 2 years. Okay, so it is of very short duration, the joint venture. After the completion of the particular venture, it comes to an end. Only goes on for 1 to 2 years. But partnership may go on for 20 years, 30 years or more. Okay, then number of members. See, number of members, minimum 2. Here also minimum 2, of course. Okay, minimum 2. But here maximum there is no limit. But in partnership, maximum limit is 10 in banking sector and 20 in other businesses. Okay, and then the last is closure. See, the closure of joint venture is automatic. It comes to an end after the completion of the venture. I told you in the first point itself. This is the same point. Okay, joint venture comes to an end automatically after completion of the venture. But partnership is not like that. Partnership is dissolved. It is terminated by mutual consent between the partners. Every partner has to be agreed, right? They should have consent between them. Then only they can dissolve. It is not automatically dissolved, but here there is automatic dissolution. Okay. So these were the differences between the joint venture and partnership. Easy, right? Okay. Now let's see the different methods of accounting treatment under joint venture. See, under joint venture, there are three different methods. The first method is when separate set of books are maintained, and the second method is when each co-venturer maintains his own books of accounts, and the third method is memorandum method. So let's start off with the first method, that is separate set of books, when separate set of books are maintained. See, under this method, an accountant is appointed by the co-venturers and he is given the sole responsibility to prepare these three accounts: joint venture account, co-venturers account, and joint bank account. Now, joint venture account is prepared to find out the profit or loss made by the joint venture. So it is almost similar to trading and profit and loss account. It is a nominal account. All right. So we'll debit all the expenses and credit all the incomes. And then we have co-venturers account. Now this co-venturer account is almost similar to partners capital account. Okay, partners capital account. So we'll have to prepare this account. And then third account is joint bank account. We are going to have some receipts and payments, right? So we have to have joint bank account here. And then here in the second method, when each co-venturer will prepare his own books, here we have to prepare joint venture account and other venturers account. Okay, joint venture account is almost similar to same trading and profit and loss account, and then other venturers account. See, other venturer account means, it means that let's say there are three venturers or three co-venturers A, B, and C. Now let's say A is preparing the books. So now A will not prepare A's account because no one prepares their own account. He will prepare B's account and C's account. So that is what is meant by other venturers account, not owns account, other venturer. So A will prepare B's account, C's account. If B is preparing the books, then B will prepare A's account and C's account, like that. Alright, here two accounts will be open, joint venture account and other venturers account. And then in the third method, in the memorandum method, a memorandum joint venture account will be opened, and then joint venture with co-venture account will open. We will discuss all these three methods in detail later, alright, in the coming videos, and we'll also solve a simple problem in the next video. So stay tuned. And now I hope you have understood the complete concept of joint venture and it was easy, right? Okay.